Hey, welcome back everyone. How are we all doing today? So in today's video, we're going to discuss the usual concept that helps us understand the market like we usually do every week. So we're going to talk about COT data, the economic calendar. We're going to talk about the economic surprise meter. And we're going to take a look at the top setup as usual. Then we're going to jump in straight into the charts as like we always do. All right. So before we actually move forward, okay, if this is your first time watching the channel, please don't forget to subscribe. Okay, like the video, share with your friends, and if you have any question, you can always ask in the comment section. So without further ado, let's get straight into it. Today we're gonna be kicking off with the US dollar. Okay, let's start with DXY. So right here, this is what we have on DXY, and you must have heard me say this repeatedly in the past couple of weeks that I am anticipating for a full retest of this 97.10, and you can see we relatively got that last week. Okay, when we saw this, the market actually dropped. I think this should be Friday, Thursday, Wednesday, then we have Monday and Tuesday right here. So on Tuesday we got this particular zone right here got retested. All right, very well. And since then we've seen DXY actually somehow fades away from that. You can see this is everything we saw last week. It is very, very small. And slowly we are getting a very, very lazy momentum on the dollar. All right. The market is not as buoyant in its momentum or in its movement like it was a few months back when we are getting all of this. Okay. Since July, we've seen a really, really faded momentum in the price of DXY. I mean, you can see for yourself. Look at what we had September to literally February last year, we saw a very distinctive and very fast momentum to the upside. And from February all the way down to June, July, we got very decisive momentum to the upside. You're getting it. Now from mid-July all the way till today, till literally today, which is the 14th of September 2025, we got more like a range band. All right. Now, is the US economy quite strong last year, September, all the way to this year, February? What happened? What has changed? I won't categorically say that the US economy has been very strong throughout that time, although the economy was actually very decent. Okay, but since June last year that I've been using this particular software, I've not really seen US economy above 60%. Okay, I've not seen it above 60% since September last year that we got that decisive move to the upside. And throughout this year, I've not really seen DXY the dollar US economy again above or below 30-40%. All right, but right now what do we get? We get the economy at 33% and the currency strength, which is the dollar itself at 22%. Both of these is signaling weakness. I mean, intense weakness. Look at the growth in the United States. We have 50% growth. Inflation is down. Job is down. I mean, when I say down, I mean they are pretty much flat. Okay, literally flat. That is what I mean by what? That's what I mean by growth, by down. And what else do I want to talk about? I mean, just look at the data itself. Okay, not even focusing on all of these metrics or the calculation or whatever. You just take a look at the data itself. Okay, wage is literally flat. Okay, we have unemployment rate literally almost at the same thing. Okay, it's pretty much flat. Also, it's neutral because what we got the last report on the unemployment rate was more like what was being forecasted. Okay, to 4.3%. Although that is a very good number considering the economic side of the United States, the job side, I mean, the labor market in the United States, 4.3 unemployment rate is still quite decent. But look at the initial jobless claim. Week by week, because this is released every week. Weekly, it just keeps getting worse. All right. Almost every week now since August. Okay. The jobs came very bad last week. I think last week, September 3rd. Okay. ADP got pre on co, and NFP was awful. All right. Now take a look at the growth. The growth still looks quite decent. Okay. We got a little bit of an increment in the GDP growth. All right. Which was very good. The economy looks like it's robust. Literally, we have manufacturing PMI kind of contrast a little bit by 3.3. Okay, that is also not the worst. And then we got a service PMI at 1.1 increment. Okay, we got a robust service PMI. Literally, this is just in the anything below 50 indicates a contractionist in the economy. The economy is not expanding, it's not booming as it should. All right. So when it comes to the growth looks pretty decent in the United States. But then look at the inflation. Okay, pretty sticky. Nothing looks good over there. Okay, CPI 2.9%, far from the Fed's target. Although PPI that was released last week was very good. We had 2.6%. That means inflation is slowing down. But when inflation is slowing down, it is good for the economy, which is the stock market. And we saw what happened to Nasdaq, to S&P 500, to Dow Jones. Okay, they all rallied last week at the back of what? The PPI, because the production, the preserved price index was actually pretty good. Okay, and also something very quite unusual happened last week too. Not quite unusual like that. Okay, it doesn't happen like that. The CPI, I mean the PPI will come before the CPI, but it did happen last week. Okay, we got this PPI before the CPI was released. But let's just leave the crazy aside. Okay, focusing on data, we had a very good PPI data, which is actually very good. I'm gonna just say that. All right. So PCE is also very flat. The wage growth is also very flat. So everything looks flat. All right. Inflation is not looking very good. All right. The job data is very awful, but we have growth. And now at the back of the economy, nothing really looks good over here. The stock market is also pretty awful, but we got a booming. I mean, S&P 500, Nasdaq, all of them still made a new high last month. Okay, a new all-time high last week. Excuse me. All right. Despite the fact that the US economy looks like this. Okay, so this just kind of like tells, or all these people, like all these traders that don't really use fundamentals to trade, it just somehow makes you feel like maybe they are right, because when you're looking at this, you want to see something like this. Okay, you want to see the continuation of this, of of the United States dollar to keep dropping. But then tariffs, don't forget again, the growth is there. Okay, people are not, or investors are not like backing up on the United States just yet. Okay, so that is just the way I'm able to like make sense out of what is happening in the economy and what is happening on the chart. Okay, so now let's focus on the chart for a minute on DXY. So moving forward, we've seen the market retesting this particular region. Let me make it a bit bigger so it can make a little bit of sense to us. So right now, this is what we have right now on DXY for the past, let's say from July, for the past 2 months, literally. All right. So I'm still on this particular spectrum. Let me just put it as a spectrum myself, or let's say thought process. All right. That if we get the market to retest this particular 99.8, okay, or 98.9, excuse me, and then we can get more like a range around this box. Okay, right there. The market can just continue to range right there because the economy doesn't look very good. But maybe next month, because we're already in the mid-September already, so the month is almost kind of like over. The major data has been released already. Okay, the NFP has the major job data has been released. The major inflation data has been released. Even the manufacturing and the service PMI has been released. Almost all the major data for this month on the United States has been released. Okay, for the United States has been released. So I would say we might likely get a range bound moving forward for the rest of September. Now, if fortunately, or one thing leads to another, and something happened in the United States, the economy gets super bullish. All right, before I can consider a slight bullish tone in the United States dollar, I would say I want to see a break above this 98.7 to begin with. Okay, 98.7 to the upside, then that looked very good to me. Okay, 98.7, cross above 98.7, that looks very good to me. However, if one thing leads to another and we're getting more bearish reading, nothing makes sense, there's maybe some headlines comes out and the market was just, it was not really good for the dollar. Don't forget, the United States president is calling on its EU friends, EU bodies to do what? Sanction. They put 100%, I don't want to say sanction, but let's just say 100% tariff on China and India for buying Russia oil. Okay, this was not what I was expecting from Trump, considering what he went through, what he put the world through when he started his liberation day. Okay, what he put his friends through and the market through when he started his liberation day, when he started the 100% tariff on China, 145, 200. So I think he did around 245 also. He almost touched 300 tariff on for China. That was actually very wild. Okay, but anyways, it is what it is. Okay, it's the Trump. It does what he likes. It is what it is. So now focusing back on the chart. So if anything happened that doesn't make sense in the United States, or an headlines comes out, or Trump decided to say one or two things that is considered a dovish sentiment, on DXY or on the dollar itself or on the United States economy itself, all right, we'll likely get this particular move to the downside, and that will be all for the dollar like we know it. And I'm actually leaning towards this particular bearish momentum. Okay, I'm leaning towards that side, because when you look at the economy again, okay, when you look at the economy again right here, nothing makes sense. Okay, we should be seeing a very fast drop in the price of the DXY. Okay, growth is the only thing holding the bag right now. Growth is the only this percentage that we have right now. Okay, if we divide everything 33, 33, 33, okay, if we divide everything by 33, okay, because 100 cannot be divided into 3 equal half, so we need 33, 33, 33. If we have this 33, all right, I would say job takes one, it's already over. Inflation takes some, it's over for the inflation as well. And then it is the growth that is holding the bag right now, and we can connect that to what the US stock. Even from this 33%, when it comes to the currency, the inflation that came out here last week, which is PPI, it just reduced some part, just take some part of that 33%, the 33% portion of growth. So what else do we have? We should be getting a much weaker reading on the DXY. I mean, even weaker momentum on the DXY, and that is why I'm leaning more towards bearish momentum on the dollar, because as a data-based trader, macroeconomics-based trader, because that is what I would like to call myself. I trade with the data. Okay, so I would say I would rather consider shorting the dollar moving forward. So I think we've been able to cover dollar at large. All right, so that's just that. Now let's start with the economic calendar. What do we have? First off, the elephant in the room, or the elephant, the lion, and the tiger in the room is the Fed fund rate. Okay, the market is expecting 25.25% rate cut. But sentimentally, okay, but considering where the economy is right now, the job data, the inflationary data, or both, literally, okay, people are sentimentally expecting around 50 basis points cut. Okay, the Bank of Canada also are planning to cut 25 basis points. That is actually very fair considering where they are right now. So when I go back to the chart, you hear me say I'm buying GU, and at the same time I'm buying UCAD. All right. I mean, you will be like, wait, why are you doing that? Canadian economy is awful right now. Okay, the United Kingdom economy is so good right now, and the dollar economy, US economy is awful as well. So the Canadian economy is awful. The US economy is awful. So that somehow puts me in a very safe zone with USD CAD, because I know the dollar will probably find a way to overpower the Canadian dollar because it is very weak. If it is now, this is the crazy thing about the market, right? So we have US economy very weak. We have CAD also very weak. Okay, US is pretty weak, CAD is pretty weak. And then I'm still betting against this, that this weak US dollar will overpower the Canadian dollar. All right, that is how crazy it is. That is how much strength the dollar has been able to wield, okay, in the market. All right, the strength is just crazy. So pay close attention to that, because the CAD economy is not looking very good. Let's quickly take. Imagine I click on AU instead of CAD. So we're gonna have to come back later for that to also load up. Let's see if it's gonna load up. Okay, it actually gets there very fast. You can see what we have right here. 25%. Both the stock market and the Canadian dollar is awful. Taking a look at the Canada economic heat map right here, it is not looking very good. The GDP growth, they don't have growth. Okay, they don't have growth. Everything is contrasting. Even though the manufacturing PMI, we got some very good reading, 2.2, considered what we got in the past, which is previous, but it's still below 50. It's still a signal contrast economy. When you look at the inflation in Canada, you can see that we have, the inflation there is pretty hot. I'll say that. All right. We have retail sales. Retail sales looks very good over there. I'm going to say that people are still like buying stuff. I guess they have money over there. Okay. But then the CPI and PPI is not looking very good. Okay. We have CPI at 1.7%, slightly fair. I'm just saying fair because it's below 2%, which is the target. So that's good. All right. But then PPI is still pretty much hot. 2.6% is not looking very good. Okay. So I would say that growth is 0. Okay. Inflation is probably, let's say 50%. And then the unemployment is 0. So now we got almost the same thing for the United States, and you see that it's more like the same print. We have a slowdown inflation right here for the CPI. So we have the bullish reading for the CPI, and we have the bearish reading for PPI in the stock market. I think that's a fair reading. So growth is 0, inflation is what? Is 50, and this is the labor data. The labor is 0. Literally in Canada, this is what we have right now. And now we're still expecting the Bank of Canada to do what? To cut 25 basis points. That is not good. Okay, so you want to pay close attention to all the card pair. All right, you want to really pay close attention to them. So moving forward, I really don't want to spend so much time here today, but I'm already spending it. So we've covered the US bank, the Fed fund rate cut. Okay, Fed fund rate, the rate cut in the United States. We've covered that. On Thursday, we have the employment change in Australia, and in the United Kingdom, we're expecting a rate cut of the MPC official bank rate vote. We have official bank rate expected to be the same. I think, considering the fact that we are expecting this is a very hot inflation. I mean, the inflation in the United Kingdom is very hot, pretty hot. Okay, that's one. But then the Bank of England is still expected not to do anything. Excuse me. They're expected not to do anything. That's wild. That's like wild. So we see how that goes for them. Okay. Also, I'm still on Thursday. All right, unemployment claim in the United States expected to come slightly lower. I think this around 20, maybe 18K. We see how that goes. All right, this is not going to change a lot in the labor market for sure, but let's see how it goes. All right, let's watch out. So, tentatively on Friday we have the Bank of Japan rate cut as well. Okay, they're not planning to cut anything. Also, I mean, there was a report last week on the Bank of Japan that, considering the fact that Ueda I think he tendered his resignation letter. I think he's no more the governor of Bank of Japan. I don't know why. I didn't really read much into it. I just saw the report. I went through it, and we saw the impact on the Japanese yen very early on Monday morning. But the market just rallied up. The UJ, GJ, everything just rallied up before it now dropped down again. So that was more like the effect. All the gap. There was a massive gap between CHF, Gbpjpy. I mean, we saw it. So that was just by the way. Now, the Bank of Japan figured, or they said they will probably wait a little bit longer before they start cutting rate. They decided not to cut rate this month. So if that's the case, we see how that goes. But for now, what we have right here is that the United Kingdom, Bank of England, and in Japan, which is Bank of Japan, they decided not to cut rate. However, Bank of Canada and the US Federal Reserve decided to cut 25 basis points each. So pay close attention to that for this week. Yes, we've covered the economic calendar. So let's go to this fun stuff, the COT filing. So how are the institutions positioning themselves? Let's start from this particular here. You can see right here, CAD is still largely being shorted. Swiss is also largely being shorted. Aussie is also largely being shorted. So we have three very weak currencies. Let's go to the strong one. Gold is largely being bought. Silver is largely being bought. ZAR and Japanese yen is also largely being bought. Euro and Nikkei is also largely being bought. Anything above 60, I consider it largely bought. Yeah, that's just the way it is. So we have gold, silver, ZAR. The three assets, very odd, very odd. And Japanese yen, I think Japanese yen lose some edge or lost some edge. So it's been awfully sold out. I mean, these three, Nikkei, Euro, and Japanese yen, they actually lost some of their edge. But we're going to see the filing later. I'm going to be very brief right here. So as far as the Japanese yen, right here, you can see that some of the short contract was closed and they added some longs. That's very good. All right. That's very good. Where's the Aussie dollar? What happened? I think some long contract was also added, whereas some short contract was closed. In the United States, both long and short contract was added. Okay, so that's very good. But we had a larger number of short contract. And if you look at the overview holdings, okay, of the for the institution, you can see just for a 3.68% long contract, and we have 56.32% short contract for the United States. That means the institution themselves are literally shorting the dollar. All right. Now the card, both long and short contract was added, so like mildly the same at the same range. All right, or at the same range. Gold, some short contract was closed. The same thing happened last week, by the way. Short contract was closed, and and they added some new long contract, and that left their gold holdings at 83.73% and 16.27%. This is not the data that day trader needs to focus on. All right, it's for someone like me, a swing trader, because when you see a institution adding to their long contract and closing their short contract, for the next 2 days you might see a retracement in gold. The market might just come down, retracement, and Wednesday can come or might come and just rally back up. So this is something I'm paying close attention to because it is very important, very pivotal to my entire trading journey. I mean, entire trade for this week. So taking a look at Euro, some long contract was added and short contract was also closed. So that was actually very good. On Bitcoin, mildly they added new long contract and they added some short also. So that kind of left the whole thing at 50-50. All right, you can see 50-50%. So that kind of left Bitcoin at that range. That's very fair. On the GBP, both long contract and short contract was closed. S&P 500 short contract was added. A bunch load of short contract was added, and a ton load of long contract was also added. So that is mildly weird. I'm going to say that, very weird. But let's pay close attention to it. Don't forget the stock market that we saw right here on the US economic heat map right here. You can see that it's 22%. Okay, for the currency. Let's take a look at the stock surprise meter. If this is going to come very early, it's not going to come early. So let's go back to what we were discussing. We're going to go back there later. The US stock market the reading is around 33%. Okay, it's only the currency that is around 22%. Pretty weak. Both of them are still very weak. But at least the stock market is coming up gradually, and it's riding at the back of the PPI last week. Okay, the one that was released last week. So let's not forget that. So moving on, silver is also something we should pay close attention to. On silver, they closed some of their long contract, and they closed just tiny short contract, and still left their old position at 79.65% long and 20.35% short. That is still that still indicate that they are largely buying. Okay, they're still holding their long contract. I mean, it's still very at large. They're still bullish. NZD dollar, they closed some of their long contract and opened just a tiny bit of their short contract. Tiny. All right, tiny. When you compare this particular the new contract that were added, which is the short one, and the long that were closed, you see that it's very tiny. All right, US oil, both long. Okay, they closed some of their long contract and they had a short, so supply is overpowering demand right now on US oil. I kind of closed my trade on US oil because the drama is too much. Or maybe I will add to it myself. I'll have to my short trade on US oil. Who knows? All right. Lastly, on Swiss franc, we have some long contract was closed and fresh new short contract was added. They are still selling Swiss. Why? I mean, you would imagine. Why would they be shorting CHF? What do you think? Let me tell you. Because their interest rate is 0%. Okay, freaking 0%. Freaking 0%. Who cares about that? The only thing that's the Swiss franc, which is the CHF, the currency itself, the only thing it's riding on right now is the fact that it's a safe haven asset. Anything outside of that, it should be on the ground. Like Swiss franc itself as a currency should be on the ground. But it's a safe haven asset. It's the kind of place you put your money when you're not sure about anything. So everybody will run there. So this is the UK economic heat map. It looks, I mean, yeah, literally economic heat map. It looks very decent. Okay, we have, if you're going to use the same metrics that we normally use, we have the growth at maybe 50%. We have inflation at largely, okay, we have retail sales, CPI, PPI. We have it at large, maybe 50% also. And we have the unemployment rate, or let's just say the labor data at maybe 60%. Okay, largely. So this is the growth, this is inflation, and this is, the labor data. It looks good to me. The job data looks good, inflation looks good. It's not best, inflation is not the best right there now, but it looks very decent. Okay, we have crazy CPI. The retail sales is still very hot, and the PPI is also not. PPI is not bad. 0.3% is fair. All right, it's fair. It's also than what was expected, but it's pretty fair. All right, and the growth also looks mildly decent. Service payment looks good. There's no growth in the United Kingdom. I mean, we are not new to that, anyways. So, and the manufacturing is still contrasting. So, I'll say 50%. So, the UK economy looks like decent. Okay, more like decent. That is all I have on the United Kingdom economy. So that's all. We've talked about the COT data. We've talked about the economy in general. We've talked about the economic calendar. The next thing to talk about is this top setup, and then we jump straight to the chart. All right. So now on the top setup, what do we have right here? We have Aussie Swiss looks very bullish. Aussie CAD is actually very bullish. Pound CAD bullish. We are very bullish. We have Aussie Kiwi also very bullish. NZD CAD also very bullish. What do you think all these very bullish currency pair? What do you think they have in common? They all have cat. All right, we have Sweezy right here, and we have one that is actually just AUD and NZD. So they're both kind of like counterintuitive right now. So we have most of the CAD pair very bullish. You can see right here we have USD CAD also, and we have Euro CAD also pretty bullish. We also have Euro dollar, Pound dollar. Both of them are pretty bullish. Pound yen is also very bullish. We have gold. Gold is the only asset that is still pretty bullish right now. Okay, it jumped actually from 11, which is very bullish, all the way down to 7. It's not once, it's just slowly, intermittently. But right now, I've closed on my trade on gold. I only have silver buy right now, and it's doing very well, honestly. So we're going to see how that goes when I started talking about my open positions. All right. So if I'm going to recommend any trade for you, I would say let's take a look at euro dollar, pound dollar, China 50, okay, which is on com 15. We also have pound yen. We can take a look at pound yen. NZD dollar, we can also take a look at it. Aussie dollar, we can also take a look at it. We're also going to take a look at it. All right. And you can take a look at it as well. All right. So those are the trade I would say consider looking into this week, all the way from top setup. All right. CAD yen also pretty bearish. All right. Euro Aussie bearish. CAD CHF bearish, and pound Aussie bearish. So I would say take a look at CAD yen. I'm not sure about Euro Aussie, but we're going to talk about that on the technical perspective. All right. So that's all we have on top setup. Okay. So let's go to my open positions. All right. Real quickly, I have Aussie dollar. I've been buying this one for like over a week now. All right. You know I don't set take profit, right? So this one is still pretty much riding, and my take profit is as large as right at the top here, which is at 0.6428. Okay. It's pretty much at the top here, but let's target this place first. Okay. I'm talking about 0.6690. All right. Let's target that region first. If the market ends up breaking above it, then we can shift the goalpost all the way back to 0.6928. We can shift the goalpost and target 0.6928. All right, so that's that on Aussie. I'm still holding this one. If I'm gonna recommend this trade for you, all right, I would say anticipate for a break above this particular region. All right, a break above this particular region right here, and then maybe we get a pullback. All right, then you can anticipate for more further rally to the upside. Although there's also a possibility of maybe a pullback to retest this particular region that was broken. Okay, we have resistance here, which was broken around here. So now we might actually get this particular resistance retested and now use as support. If that is the case, you can anticipate a buy moving forward from there too. So we have to plan. Don't just sit and anticipate for one play right here on Aussie dollar. Don't just sit and anticipate for this. Okay, I used to be like that. All right, it's very good if you do that. If it happens, I will actually add to my trade right here. I will add to the positions. All right. But if not, if this failed to happen, the other thing you can expect is a rally harder to the top here, and the market can now use this particular region as a pullback. All right, then we can do what? We can look for buy opportunity at the top here or at the bottom here. Those are two regions that you can anticipate a buy from on Aussie dollar. Don't just sit and wait for this play alone. It might not happen. That's what I'm trying to say. That's that on Aussie dollar. We have Swiss. I'm also buying Swiss, by the way. All right. And if we take this to 4-hour time frame, now let's quickly talk about the gap. The gap has disappeared. Interesting stuff. Okay, there was a gap right here last week. Okay, there was a gap right there that this summer got filled up, right? Because I was buying at the top here, then this particular drop closed me out around here. So I took a fresh buy right here. Even that buy that I took, it was not for free. Because throughout the best part of last week, I was on a drawdown of Swiss, and I had already given up, honestly. When it got to this particular bottom right here, I had already given up because my stop loss was slightly below this particular low. But then, as the market would have it, the market came down. I took a buy, went up. As a matter of fact, last week I added a buy to this place. I added a buy right around here. So it's one of my intraday small little buy for people that I do copy trading, something like that. So I just added a buy right here. Very small risk trade, and it all looks very good now. So on Swiss yen, I would say take a look. Don't anticipate for a buy right now. If you're going to take a buy, you can actually look for a buy at the top here. Okay, look for a buy at the top here. Anything from here inside this box, just watch it. Okay, because even I am watching very skeptically. Okay, very, very cautiously. That's why I'm watching this, because it can actually drop. All right, but let's see how this goes. It's actually been very bullish for a very long time. It's very bullish pair. So pay close attention to it. All right, pay close attention to it. You might actually get into a very good trade on Swiss yen. USD card, like I said earlier, I've been buying. I started buying last week, anyways. Okay. And the dollar, what's it called again? The inflationary data that came out last week was not very good to this pair. But then, let's see how this goes. All right, it's been very bullish. Also, it's been a really bullish momentum in a mid-term. Let's just say mid-term. Okay, we have, excuse me for that. We have higher high, higher low. We have higher high, higher low, and this one seems to look like something that we can get that will form a fresh new high. Okay, once this particular top, this particular high has broken or is broken, then we can get a further rally to the upside. But anything outside of that, I even got in very late because I don't really trust this. Considering where I stand on DXY, it is counterintuitive and counterproductive of me to be buying USD CAD because I'm largely bearish on USD itself. And I'm largely bearish on CAD now. So that's why I'm taking it back. I'm just betting that the dollar weakness will be much more. We literally overpower CAD weakness. That's what I'm trying to say right here. So I'm holding a buy on this one. It's not something I would recommend anybody to do. But, in the name of transparency, I have to talk about my open position. So that's that. Pound dollar, yeah, this is one I would recommend for you. So as far as pound dollar is concerned, I would say that I'm leaning bullish. I mean, we've seen the US economy, we've seen the UK economy. Have we seen the UK economy? I think we have. But if you haven't, you were not here when we shared it. This is where we're looking at again. Looking at the UK economy, you can see right here we have a largely bullish GBP impact, the pound impact, and the stock market in the United Kingdom is also pretty much at 50%. So that is actually very good. On that front, we have a very good, we have 50% for growth, okay? We have more like 50% for inflation as well, okay? And then we have, what's it called again? We have like 65% for the labor market in the UK, all right? So largely, at large, it looks like a very bullish economy to me. It looks like a very hawkish economy to me. So I would just keep that. I want you to keep that in mind as you position yourself for this week. All right, that's just by the way. So as far as the pound dollar is concerned, we've seen the US economic heat map is not looking very good. So as far as the pound dollar is concerned for me, let's wait for break above this 1.38, right? 1.3580. 1.3580. Wait for break above this particular region. If you get a pullback, you can look for buy opportunity right around this region. I took a buy here. I've not added any trade to this one. Okay, I'm still waiting for this play. If the market break above here, this particular high, you can see we have multiple highs right here, which has literally turned to resistance anyway. Okay, it's now in resistance. So if the market break above this particular resistance, it's a very strong one. It has been tested 1, 2, and 3 times. The same thing with this particular support 1, 2, and 3 times. So we have a very strong support and resistance right here. So if the market break above it, pull back to the downside, you can look for buy opportunity on a long term for pound dollar. Now you might be asking yourself, so where do we go from here? Where do I target? Because I personally don't use TP like that. Okay, I just let everything fly. So let's look at the back. Where is this momentum coming from? We have a weekly demand zone right here. Okay, we have a weekly demand, supply zone right here. We have another one at the top here. So you might actually just kind of like target this particular region at 1.4000. All right, you can't target that place. It's not far gone. It's not too crazy to target it. The momentum is actually very decent. Okay, above all, the momentum is very good. All right, if we are picking it from the bottom here, we have high, we have high, we have high, we have high, we have a new high, we have high, we have high. Then we have this massive dump to the downside. I kind of just corrected almost everything from here to here, more like 50%. Then since then, we've gotten a couple of highs too, okay, consistently, okay, and then we got another pump to the downside right there, okay. We got something like this. After a massive rally to the upside, we got like a very massive drop. Then we got another massive rally to the upside, we got a massive drop. So this particular high has not been extensively broken like that. So maybe we're going to get a massive extension to this particular region, or even further to this place. Then we're now going to get another drop. Okay, then that will follow another rally, then another massive drop. All right, until we get any of this particular low. Now, this is the current low that we have right now on the UK, on pound dollar. Sorry for all this drawing. Okay, we have rally high, a massive drop, rally high, a massive drop, a swing high. Okay, oh god, let's do it again. All right, we have a swing high, swing low, a swing high, swing low, right? Another swing high right here. Now I'm expecting this particular swing high to make it to the top right here before I get a fresh new swing low, probably back to this place. Okay, but the current swing low that we have is right here. So before I can, on a long term, before I can be bearish long term, I would say that we have to get a break below here. Then I would probably consider shorting this one probably to the abyss. Okay, abyss smash short. That's what I'll call it. All right, but right now that's a long term. That's like a positional kind of trade setup. All right, if you're willing to trade for like 6 months, you want to hold the position for 6 months. That's what you'll be looking for. But personally, right now, on a smaller band, smaller perspective, shorter perspective, but medium-term perspective, not too short, not too long, I would say just anticipate for the retest of this particular region right here, 1.400. All right, and you can just expect a rally to the upside right here after the break of this particular resistance that we've talked about earlier on. Okay, you can see we have a range right here. So just anticipate a break, pull back, and then all the way to the upside on the pound US dollar. It doesn't get much easier than that, in my own personal opinion. NZD dollar, again, I'm also buying this one. Looks very good, quite decent. Okay, as a matter of fact, I had it to this one, and I think it was on TikTok, when I opened this trade and the market dropped all the way down here, I got a comment in one of my videos on NZD. The guy was like, I must be in a loss right now, this. And honestly, I was actually very skeptical about this trade, even myself, and I like the fact that someone commented. Why? Because it shows that people are actually watching. All right, it shows that people are really understanding what's going on in the market, and that was actually very decent. Okay, so now moving back to what I was discussing, the market actually showed a very decisive bearish momentum right here. I mean, nobody can go against this. This is very decent. But when you look at the economy, the trajectory between the NZD and the dollar has changed over time. Okay, the economic stance in the United Kingdom, in the United States, is getting more and more bearish, whereas in New Zealand is getting more and more hawkish. All right, so you have to move alongside the economy. It's not something that will happen immediately, okay, but gradually, slowly, you're going to get it, you're going to see it. And that is why I was able to take this particular buy right here, and I add on to it. Okay, despite the multiple retests of this particular region that kind of just shook my trust on this position, but then I had to I hold on to it, and then we got a break above this bearish channel. All right, and right now the market is at the top right here, and we got a retest of this particular resistance right now. Now it has used it as support, so maybe we're gonna get the market to continue to the upside to like 0.6120. All right, maybe we're gonna get this particular retest next week. I don't know, but I would love to see that happen. So in the long term, this is still much very bullish to me. Okay, it looks very, very bullish. I'm gonna say that it looks extremely bullish, in fact. All right, so my ultimate target would be right at the top here. Okay, then I will probably close the trade, but I might even get out earlier. All right, maybe, just maybe, if the market gets to this particular region, I will close it, wait for another pullback, probably out of the position, then see if we can get this one. And every junction of the pullback, I will be adding to my position along the way. But then, do we think dollar will close this year bearish? I can't say. Okay, but let's keep watching. All right, that is the fun part of trading. And as a swing trader, you get to watch everything play out. Slowly, but definitely, you get to watch everything play out. So that's that on NZD dollar for me. Silver, I told you that silver is the only one I'm still buying right now. So I'm still holding a buy position on silver. Still looks very good. All right, my trailing stop is actually right here. I'm being very generous right now. I don't want to put it here because something is still telling me that we might get a pullback and then the market might rally forward to 43.50. Okay, that's me for you. All right, that's me for you. I don't want to tighten it because I don't want to miss out. Okay, I really don't want to miss out. So I could have just put my stop loss there. On the 1 hour time frame, this is a very good place to set my stop loss, my trailing stop, excuse me. But I want to be very generous. Okay, I would be generous to this particular region right here. Market come back to this region, pull back. That should be around 50 to 100 pip pullback, because this particular position is already running like how many pip is this? This one. This should be like roughly 1,764 pips. All right, so that is a very good one. I'm gonna say that, but let's wait. All right, let's watch and wait. We can't rush into this now. I just want to be I want to be cautious. I want to be patient with this one before I rush into it. Okay, so let's watch out. Let's watch out. Again, I'm still very bullish. Maybe we're gonna get a pullback to this region. Okay, we rally back to the upside, or maybe it's just gonna drop. All right, but don't forget on the edge finder, it has moved below 5 really. Okay, so that is something that I don't want to take lightly, and that's one of the reasons why I kind of just put my stop loss below here, just in case it's done. I want to be out myself. All right, so that's just that. So that's that, by the way. So on my top setup, my trade recommendation. All right, so I would start with Bitcoin. Okay, I will start with Bitcoin. Bitcoin looks very good, looks very bullish. Don't forget, I was selling here, I sold here, I sold here, then I sold here, and then I sold here. This is the last one I sold that actually took me out in a loss. And now the problem is I actually went in crazy right here. I opened like 3 different positions. That's not something I do every day. But I got tapped out, which is fine, because I kind of just, once the market got to this place also, I took it back. I was playing very delicate game around that zone. Right. So, but at the end of the day, I still took a loss on this particular one. All right. But I've made decent profits from Bitcoin over the past couple of weeks that I've been trading it. All right. So right now we've seen a break above this particular resistance. Okay. It was there for a very long time. Okay. It resisted the price from breaking higher for a very long time, but it could only act so long. It could only be there for so long. So at the end of the day, last week, it got broken to the upside. Okay, it got broken to the upside. And now the plan is to see if we can pull back to this particular region. All right, I'm expecting 113K retest. Okay, the market is currently at 115. It actually touched 115 last week. I mean, 117, right? Yeah, it touched 117K last week. Okay, over the weekend, Saturday, Sunday, yeah, something like that. So now I'm expecting it to come back to 113K so I can add to my positions. Now, if it comes back to this particular region, this demand zone, I might get in very small. Okay, if it comes back to maybe 114K, okay, 114K, if it gets to this particular demand zone, because there's a demand right here. If we go back to the 1 hour time frame, let's come to the 1 hour time frame of Bitcoin. You can see right here we've got a very decisive demand right here. So I wouldn't be oblivious to be expecting a massive drop. Okay, so if the market comes back right there, I will have a position, very small position by the way, very small. I can't really stretch that enough. Very small position. However, if it drops below here, I will have another small position. I will now make this a decent position. Okay, I'll build it up. However, I will close both once it crosses below here. Okay, if it touches this particular region, I will close it, and right here, I will take a short. I will take a sell trade just to mitigate my stop loss. So I won't close a chunk lot of loss. And you know how it goes. I will edge some part of my position. If it crosses below here, all right, if it crosses below here, I will take a sell trade. Without stop loss, without take profit. Okay, that's how I trade crypto because it can be very crazy. All right, so that's just that, by the way. So pay close attention to Bitcoin. All right, it looks very good. The ultimate buy region is around here at 113K. Again, I will take a buy trade if I see a reaction around this demand zone. However, if it doesn't come back here and we didn't get here, then I'm not going to take a trade on Bitcoin moving forward. So back to 4 hour time frame and back to Audjpy. So what do we have on Aussie yen? Aussie yen has been crazy. You can see this kind of stretch. I mean, it's not every day you see something like this on Aussie yen, which is very good. Aussie has been very strong lately. So personally, I would say wait for a pullback, all right, and take it back. Okay, there's no demand anywhere on this one that you might want to like play chicken with, honestly. Okay, so I would say even the demand we have is still below here. So it's still more like coming back to this particular region. So wait for this pullback, back to this particular zone. You can see how big it is. Then I'll split it back, go forward. All right, if it doesn't come back, I wouldn't advise you to actually rush into this one. It might be very delicate to rush into it. So that's that, by the way. Euro USD, I'm still largely bullish on this one, but I would say a cautious entry is advised. Don't forget last week I said that if I get a bearish 2 hour candle close, I will close the trade, but then I didn't get it. The market rallied hard to the upside, which was very good for me during that Wednesday. And on Thursday, we started seeing this particular drop. Okay, that was when the CPI data came, and it was not very good for the dollar. So I put my stop loss right here, and I got tapped out. Now I'm out of euro-dollar pair. I'm out of my euro-dollar trade. It was very good. It was a decent profit. I was able to close roughly around, how many pips is that? That should be around 129 pips. It is not bad for euro-dollar. Okay, it's not good. So we can't expect 1,000 pips on this one. So that's a mildly decent profit on euro-dollar. Now the plan is, let's see if we can get a rally to the top, somewhere like this, a pullback, and then we can add a buy trade at the bottom here. Okay, I want to see this particular top getting retested. I want to see a pullback, and then after that pullback, I want to see what? I want to see a reaction at this particular resistance, term support. All right, resistance do what? Resistance term support. If you get this particular entry, a reaction, a candlestick pattern that looks like a rejection candlestick pattern, maybe a morning star or maybe an engulfing candlestick pattern, then I'm gonna have a buy trade. And there is enough room at the top to target, to be honest with you, on Euro USD. There's enough room at the top. Okay, although this reaction is happening right now because of what dollar is doing also. Okay, the same thing on GU, but there's enough momentum at the top. So pay close attention to Euro USD. GJ, let me talk about GJ and then I will wrap it up from there. All right, so GJ is another one I would recommend. Still very bullish. You can see that. Now look at things. Look at both. Okay, look at the market. We have AU rally hard. Not AU. AJ rally hard to the upside. GJ rally. CHFJ rally hard to the upside. And look at GJ. GJ used to be the most volatile pair among the dollar pair. GJ used to be the most volatile pair among the yen pairs. But now look at it. It is not volatile. So that's the shift in the economy. That's something that not so many people really understand. Okay, Aussie has been very strong for like 2 months in a row right now. Okay, so that is something we have to pay close attention to. The economy is very, very important. So personally, I would want a further Possibly, we have a demand right here. Market can come down here and go hard to the upside. All right, we have a no room at the top. We have 204. Okay, that can't be targeted. It can't be targeted, excuse me. All right, so that's one. The second one is a break above here, a pullback to this region, 200 region, then rally hard again to what? To 204. Okay, 204 will be the target for me on GJ. So pay close attention to these two setup on GJ. Okay, a push back to this particular demand zone, an entry with candlestick pattern on the 4-hour band, and then wait for it and let it go. Just take the trade, put your stop loss below here. You should be able to get 1:2, 1:3 or more. All right, let's even play it out anyways. Control Z. Okay, excuse me. Let's play it out. This might be the only one I'll probably play out. Let's say we get an entry right here. Excuse me. All right, good. So we're looking at 104, right? This is even more than 1:3, by the way. So we're looking at 104. If you ask what is at 104, you will see that we have something like this on 104. You can see right there. I mean, it's just sitting there for free. So we have something like that on 104. It looks very good. So if you get an entry right here at this particular demand, oh, good Lord. Like I said, this is the last one, right? So let's go crazy. So you get an entry around this particular region. Maybe you get something like this. The market drops, and you get an entry, target 104. Simple stuff, okay? And you put your stop loss slightly below here. You don't need to go crazy about it. That's 1:4.48. That's 1:4.48. Like, this is a paraphrase. However, if you're not interested in that and you just want to take something like this, a break above here, a pullback, you want to go crazy on that one, this is how it should play out. Okay, take your buy somewhere around this region right there. Okay, target this particular top right here. Come in, let's adjust this one to this particular region. Aha, still looks very good anyways. Yeah, something like this. I think it's fair. So that's good. So now focusing on this one now. Okay, this is 1:2.3. Put your stop loss right here. Okay, below this particular low. That should be 1:2. Not bad either. So we have 1:2 over. We have 1:2 position here, the trade setup here, and we have 1:4.4. Okay, 1:4.4 position right here. Okay, so take your pick. All right, I would love to see this. Okay, particularly if the market can even come all the way down here. Oh, that would be much better. Okay, so I would love to see this. But if that did not happen, if none of this happened, then I wouldn't mind taking this. But ultimately, I am bullish on the pound JPY. That is all for me today, guys. I'll see you in the next one. I love you all. Take care of yourself, all right? Stay safe there. Please don't do crazy stuff, okay? And make sure you protect your capital at all costs. And I will see you in the next one. Have a great day.